In this week's African Agri Overview, Jacques will focus on the Zambian wheat market and discuss why Zambia is still importing wheat despite a growing crop size. We also look at why poultry prices are increasing at the moment. All in this week's episode, so make sure to stay tuned. Hi, I'm Dr. Johnny van der Merwe and welcome to this week's African Agri Overview. Make sure to follow us on YouTube, where we will share regular insights into the agricultural markets of Africa. For more detailed information on sub-Saharan African soft commodity markets and prices, please make sure to contact Jacques. In the latest economic news, the kwacha started to weaken over the last month and traded on 18.88 kwachas per US dollar. The Brent crude oil price, however, stayed on $75 per barrel over the past week, with the International Energy Agency projecting that demand will exceed supply by about 2 million barrels per day in the second part of 2023, with China accounting for a substantial portion of this demand. This could, of course, result in higher oil prices for the rest of this year. As mentioned in previous episode, the kwacha to US dollar exchange rate largely determines the demand for beef, cattle and poultry from the DRC, and with the recent weakening in the kwacha, we might see slightly higher demand again as it is becoming cheaper for the DRC to import from Zambia again. This happened, of course, on the back of the government allowing everyone to draw up to 20% of their state pension fund or the NAPSA fund, which resulted in higher demand in general and prices reacting upward as a result. As a result, poultry prices also increased, with the day-old broiler price increasing to 12.5 kwachas per head, while the day-old layer price traded higher on 14.83 kwachas per head. Layer cull prices, however, remained on a lower level of 49.67 kwachas per head, while live broilers traded higher on 80 kwachas per head. The average egg price, however, were also boosted by the higher demand, trading on 49.33 kwachas per tray. We are expecting most of these prices to increase further due to higher expected demand as well as the weaker exchange rate that we saw over the last month. In the grain market, the latest maize price traded on $257 per metric ton, soybeans decreased to $338 per metric ton, while the wheat price decreased to $530. The latest soy meal price decreased to $360 per metric ton. In this episode, Jacques will mostly focus on the Zambian wheat market, so make sure to stay tuned. For more detailed information on sub-Saharan African soft commodity markets, please make sure to contact Jacques at the details displayed on screen.
In this week's podcast, we look at the Zambia wheat market. Zambia has been a self-sufficient wheat country on and off for at least the past decade. However, strong demand from the Democratic Republic of Congo in the last few years has seen Zambia import wheat despite a growing crop size. Zambia currently planting their next crop, which should harvest from middle September. As always, note that all numbers used in our tables and graphs are our best estimates, given information at our disposal, and should be seen as such. This graph illustrates our wheat production and local consumption estimates for Zambia. What catches the eye is the small 2020-21 crop of 230,000 tons. In that year, farmers planted less wheat as power supply issues were expected and materialized. Less was planted so lands could be irrigated sufficiently with intermittent power supply. We guess at least 90% of the Zambian wheat crop is produced by commercial farmers under irrigation. The last 2 years, 2021-22 and 2022-23, saw bumper crops around 400,000 tons as irrigation dams had sufficient water and the power supply was reliable. Good dam fill during the past summer and expected reliable power supply next 6 months could see another record crop for the 2023-24 year, i.e. the crop that will harvest from mid-September. The Zambian government protects the local farmers through import taxes. Imports carry a surcharge of 5%, but non-SADC imports typically deep sea, carries an additional 15% import levy. SADC stands for the South African Development Community. South Africa is a member of the SADC, so only the surcharge applicable on South African imports. The government usually lifts import taxes if deemed necessary from around May to end August to allow millers affordable imports when the local supply typically runs low. This graph indicates both deep sea and South African import parity for the past 3 years. During all 3 years, import parity declined during the May to August period as expected, marked by the blue circles because import taxes were removed and local prices followed import parity due to imports. Although Zambia in most years produced sufficient wheat for local consumption, strong wheat flour import demand from the DRC has seen Zambia a net importer of wheat. Typically, the DRC has 2 wheat flour import options, either from Zambia or Tanzania. Tanzania produces very little wheat and imports their entire need. When Zambia prices become relatively high, it pays Tanzanian millers to import wheat, mill it, and export the wheat flour to the DRC. However, during the last few years, Zambian wheat flour was competitively priced, and this origin supplied a large chunk of the DRC need. The table indicates our estimate of the Zambia wheat balance sheet for 2022-23. We guess around 30 to 35% of Zambia wheat supply, produced and imported, will be exported as wheat flour to the DRC. This is the reason Zambia imports wheat, even in bumper crop years. The next graph shows the wheat price during the last 10 years. For most of this period, prices fluctuated between $370 a ton and $500 a ton. Between April and August 2022, prices spiked well above $500 a ton and for a brief period exceeded $650 a ton. Zambia imported during this period, and although import taxes were waived, and conflict. The question is what we can expect from prices in the next 6 months. It is a rather difficult question to answer. International price trends will play a part. International wheat prices are relatively low at this point due to healthy global supply. The size of the next Zambia crop will play a part. Will there be an import need? And if so, how big? Import parity currently around $500 a ton. A big crop expected to harvest from mid-September, and the market anticipate export demand for wheat flour to the DRC will remain healthy. A price range between $450 and $500 a ton, probably a relatively safe bet from now towards year end if international prices do not move materially.
Thank you very much, Jacques. Very insightful. For more detailed information on the sub-Saharan African soft commodity markets, please make sure to contact Jacques Pienaar on the details displayed on screen. I'm Dr. Johnny van der Merwe, and thank you for watching, and don't forget to subscribe.